Before I asked who knows the EIC Accelerator, and I only saw 30 hands up. How many know the EIC Accelerator after this session? Hands up. Okay, I hope a little bit more. I think some new faces have joined in between. Very good. So next one, we want to have a more holistic picture. We want to understand what is happening in the private equity space. So the idea is the following. Is there an upward trajectory? Question mark. Are there changes in the way private equity funds are being chosen? Are more private investors coming in? Those were all questions that we asked the next speaker, who is author, economist, and investor himself. It's Michael O'Sullivan. He's in particular chief economist at Moonfare, and Moonfare is really democratizing the allocations. So investors that were previously maybe not part of the market can now go into all of these funds. So please give a big round of applause for Michael and his keynote.
Thank you very much. It's a very kind intro. Good afternoon to all of you. So this session is about the democratization of private equity and venture. I hadn't intended speaking so much about Donald Trump this morning, but I will as an introduction, because his election has a lot to do about democracy. And we can probably debate that later on over a drink and a coffee. But it has a lot to do with private equity. It has a lot to do with the future of Europe, with European politics, and it has a great deal to do about how European economies, particularly small, open economies like Austria, equip themselves for a world in which there's going to be a premium on innovation. So very quickly on Donald Trump, when we get that out of the way, his election will catalyze a lot of social trends in the States, some of them not for the better. It will also, I think, catalyze a rebound in private equity activity. A lot of the things he will do, lower regulation, lower taxes, etc., tend to be good for private equity. The big private equity houses have a lot of cash. So I firmly think this will be a catalyst for the private equity industry, certainly in the States, and then also eventually in Europe, to really begin to invest, and the same in venture. And there's been a sort of a doldrums or a depression in the industry in the last 2 years, and I think this will, for better or worse, will catalyze the end of this. And if you look at some of the stock market behavior this morning, the US small cap index futures are up 6%. And if you are familiar with how to value and model private equity, small caps is always a good kind of benchmark. So in general for the industry, it's not a bad thing. Again, we can debate the effect on democracy. There will most certainly be a big effect on Europe, and we know that European leaders have been preparing for this. What we don't know is really how ready they are for action. I think there's going to be a big transfer of power. Germany, I think, as an economy, is much less prepared for a world where Europe may have to have a trade war with America and with China. There will definitely be a shift in economic and political power towards the east, to countries like Poland, maybe also to countries like Italy. France as well, I think, is in a malaise. I live in France. My last book was on French democracy for my sins. So I think Europe is at a really critical moment now where it's going to be put to our political leaders as to how to respond. And again, the trend is away, I would say, from the old big economies, France, Germany. The UK is not in Europe anymore, but it has a lot of the same problems economically that Germany and France do. And I think the onus and the trend is going to be on small, open economies being even more dynamic. You can probably tell from my accent I'm Irish. I spent a lot of time researching and thinking about the economic model of small open economies like Ireland. In the last week I've been in Ireland, Iceland, Switzerland, And like Austria, like other dynamic small economies like Sweden, we're going to hear from the ambassador later on today, Singapore, New Zealand, they're very different culturally, but they have and they do similar things in terms of boosting growth. Very good education, a focus on the rule of law, and also a focus, I think, on R&D and innovation. And the onus really is on small countries like Austria, like Ireland, to take this model to the next level. And I can see two strands involving the private equity universe that will drive this. One is that we're in a world of debt, and again, it's the fault of the big countries here. The UK, France have debt of 110% of GDP. The US has got about 105% of GDP. And if you look at the recent budget in the UK as an example, these countries don't have the money to invest in AI and green technology. They can talk about it for as long as they want, but they just don't have the money. So one of the really big trends we're going to see in the future is growing partnerships between big private asset investors, and they can be internationalized pension funds like Ontario Teachers, the big global investment funds, let's say SoftBank, the big private equity funds, partnering with governments in the West to build critical infrastructure, and in areas where that involves an awful lot of expertise, be that space or data centers. And then on the other side of that, politicians, bankers, asset allocators, and the public are going to have to start to think about the idea of the portfolio of the future. So there is a kind of a very lazy characterization that, in European countries, people put their savings into very safe fixed income and maybe into housing. And that's probably true if you look at the numbers. European equity markets are actually not that deep, so there's not a massive choice. But in the future, the portfolio of the future will be much more balanced. It'll be equity, fixed income, infrastructure, private equity, venture, tiny bit of Bitcoin or crypto. And if you want a model for this, look at Canada. Canada has a very well-developed private equity and venture sector, partly because of tax changes and regulatory changes that were made a long time ago. And the pension funds in Canada can invest in all of these assets. And I think this is something we're going to see in Europe. We're going to see more efforts by governments to get people to invest more, not just for the sake of their own wealth in things like private equity, but also in domestic venture capital. And I can tell you, the debates, listening to all the debates here this morning, Ireland, which is a sort of similar sized economy, having exactly the same types of debate, how to open up private equity and venture to the retail investor in a very, very controlled way. And the way I would explain it to a politician is, imagine you go into a bar and there's all these bottles of wine or beer or spirits, but you're told that you can only drink the alcohol that's owned by publicly quoted companies. That would mean you couldn't have any wine, you couldn't have any spirits, you couldn't have the new craft beer. And that's something I think that politicians will probably get. And that's what not being able to invest in private equity and venture is like. Because if we go to the other session on technology, and people are talking about AI and deep tech and space tech, very, very few people in Austria or Ireland, etc., have actually got access to that. They don't know where to find the funds. They don't know yet, hopefully, about platforms like Moonfare, which can offer you access to all these funds. So being able to educate people and open up these investments to people, I think, is a way of making, we'll call it, ordinary people more wealthy. And it demands a number of things. It demands education, very basic financial education. Europe, unlike the US, is a big economic region where people are very poorly educated in terms of basic things like investing, pensions, financial markets, and that will have to change. And also, there's a range of other things. I mean, political leadership is one. Again, just to take the example of the UK, because they've just had their budget. In the lead up to the budget, the UK Prime Minister said that shares and stocks and investing in real estate, that's not for the working people. And that, in my view, is completely wrong, because it's the working people who you want to help to understand investments and to get as wealthy as the really rich people. And you have to help them build the structures and the infrastructure that we're going to talk about on the panel in a moment. And then finally, I think it demands a change in the behavior of banks and financial institutions. I'm very happy that on the panel there's only going to be 2 men and 3 women. I live in Paris, and during COVID, my next door neighbor, she's Spanish, we did a startup to try and get women to invest more. And I'd done some work on this in the past, but it really opened my eyes to how little venture capital funding is given to women entrepreneurs. It's 2 or 3%. How badly banks treat women. And again, women are not a sort of specific species who are doing it all wrong. That's absolutely not the case. It's the institutions who are doing it wrong. And there's an onus on financial institutions, be they wealth managers and asset managers, to be more transparent and to have better product across all of the asset classes, and in that way to help the local economy. So that's maybe an optimistic but slightly controversial point to lead into our panel. And I think we're going to welcome the 3 guests up on stage now.
Exactly.